We've got a great show for you today, guys, so stay tuning in right on the station that gives you what we want. That's TSLA Live.
I was listening to yesterday's space, and I was really, really encouraged and kind of fascinated by the division in the FSD take rate topic. Do you guys want to continue on that road a little bit? Kind of explore the
Sure.
differences? Yeah. So Omar says in the next 12 to 18 months, how many users do you expect? So you're saying about more than a million by the end of in the next 12 to 18 months, right?
Yeah.
Yeah. And Elon had said that for end of 2023, is that, or was it end of 2022? He predicted that first. A million people.
I mean, I think I do remember him saying that at one point, but I can't really remember the details.
Yeah. I'm trying to see 1 million if estimated testers by end of year. Yeah, end of 2022. I think maybe the main difference between what he was expecting and what we were hoping and what actually happened was the no nag situation. If there is no nags, I think everyone on the speaker board agrees, then the take rate would jump and we would actually get to 1 million users. Machine, you agree with that?
Yes, if by no nag it implies that the vehicle is very unlikely to crash into anything. Is that kind of joined with that assumption? Or are we going to have no nag and the thing gets in an accident every 1,000 miles?
I think the latter at this time, because we haven't really seen any indications of 1,000 miles without an intervention being around the corner. Omar, do you
Then,
agree with that?
No, I don't really agree. I think that autopilot usage is nearly universal. You talk to any Tesla user, and they all use at least the basic autopilot that comes free with the car. So that's always had a nag, and people still use it. The reason why FSD users aren't growing faster is two things. Number one, price, and number two, functionality. The price is expensive, and the software sucks. So change any of those two things, and you can get huge growth. And it's far easier to get 1 million users today than it was in 2022. In 2022, there was probably only, a little over 1 million cars in the United States total. So that clearly was a little bit optimistic. We're only at 400,000 to 500,000 users. So still a lot of users, but only about half that. We haven't really seen any growth. So if you want to make it grow, like they could get the take rate to 100 if they just, made it free and just sent it to everybody, right? So you play with the price and you play with the, software, actually make it drive well, actually make it comfortable. And that's really going to be the primary thing that drives adoption.
Machine?
assuming the price stays fit where it is,
Yeah, we're assuming the price stays the same.
then um, I believe the software doesn't just have to get no nag. I think it has to get to a point where it's not going to get someone in an accident um, often, or else I think people will still enjoy it. I think it will increase the take rate. I don't think for that price, though, 50% of the cars and the customers will take it for that at that price. It's still my opinion. I do believe when it gets to a point where it's not only no nag, but also basically not going to hit anything, then absolutely it'll be 50% or higher. So, and actually, yeah, I would say in that case it would be higher. It would be probably 70% or 75%. Still not 100, because there's plenty of people who enjoy driving, who don't need that. Like, what is the autopilot, enhanced autopilot take rate, or is it just included now in every car? So it's not even an option. I guess that's another way to look at it. They could
No,
at
it's
some
still
point.
an option.
It's like, what is the
Basic
take rate?
autopilot's free, enhanced autopilot you can buy.
What is the take rate for enhanced autopilot?
I don't know. We don't have any disclosures on this.
I'm going to assume it's less than 100%. If I may be a risk taker there, I would say FSD, something that basically doesn't screw up much at all, essentially autonomous or close, then you will get 75% take rate, unless you force it, which you could. You could force, you can embed it into the price of the car and all that. But just as an option, 75%. 50% is some threshold which it's hard to exactly say what features and performance would need to be to get to that. I still think definitely no nag, but I think it still needs to get to a level of reliability well above what it is today, like 10x in terms of miles per intervention at least. So I don't necessarily believe that. I hope that happens by the end of this year, but it's not a guarantee.
I mean, I feel like it's kind of 10x already. And, there's this narrative that the take rate is low, but it's actually extremely high. 400,000 people paying $12,000 or $2,400 a year, which is, 20 to 25% of the population. You just sort of do the math on that, and, you know, you're going to have a couple 100,000 new users just if you have an equal rate of new sales coming in. And the thing that people sort of don't think about too much is the utility and customer satisfaction improves exponentially as the software gets smoother and more comfortable. So, okay, it can drive, but you have to have a bunch of takeovers. They're not going to be that happy with it. If it can often drive you point to point and you don't have to touch anything, the users are going to be much more satisfied. So, can we get it from 25 to 50%? Can we double the number of users with FSD 12? I think it's pretty obvious from the early reviews that we can. Honestly, it's amazing that the old version even had 20 to 25% to begin with. This is the first version that is actually good enough that a normal person would want to use it day to day.
Just keep in mind again that 500,000 people did not pay full price. They got discounted price. Most of them, majority of them got discounted prices. Discounted today's price, right?
Well, the majority of them really came in recent years. So it's really heavily weighted towards subscription and
I don't
purchase.
I don't think so. I
Yeah,
don't think
because you
so.
just look at when most Teslas were delivered, right? You had 500,000, then
Right, but you're
100,000.
you're assuming the take rate at the point of sale stayed constant. We had a big discount in early 2019 for 3,000. A lot of people came in at 3,000. We actually have these numbers, what the user number is by year, so we can't go back, but I'm pretty sure it was above 300,000 going into 2020.
Yeah, but even so, the number of cars that were produced were so much smaller that it's really disproportionately people who are subscribing and buying in recent years. That's when all of the cars have been made.
Meta, welcome. How are you?
Good. I'm very curious about this conversation.
Yeah,
I,
that's why
I,
I brought up. I was reviewing yesterday's space, and I'm like, wow, we can actually dig into this more because this is a very material topic. It's probably going to drive the stock quite a bit. What the take rate is, purchases of FSD performance, the value add to the customer, impact on margins, impact on the perception that Tesla is a hardware versus software company, etc. Very important topic,
so the,
and we
the
have
key,
good balance of debate here.
yeah, but the key difference I would say is when you're saying it's only $3,000, I don't think that's exactly fair because back in the day you had to buy autopilot and then EAP and then FSD became like a combination of the two later. So I think that was like $7,000 at least. So maybe we're like talking about a $5,000 discount, but um, I don't think it's a full $3,000 versus $12,000.
Yeah, I was actually one of those people that bought FSD for $3,000. And first of all, they literally only offered it for like a few days before they took it back and changed it back to like 5,000 or something. But I had to buy you had to buy enhanced autopilot back then, which I paid 5,000 for. And then you had to pay the FSD, so it's 8,000 plus sales tax, 8,800, still a considerable amount of money. So there really was no point where you just got it for dirt cheap. It's always been a very expensive option, and most people have bought it in the years where it was, eight to $12,000, if not $15,000. And they're not even trying to make it go up. They're doing everything they can to get people to not sign up. Hey, why don't you have subscription in Canada? That would seem like an obvious way to increase the number of users. Whatever. Hey, why don't you send a free trial to everybody? Yeah, we'll do it later. Okay. Why don't you guys play with the pricing? We'll just keep it the way it is. They're not doing anything to increase the number of users. People are really underestimating what they can do if they decide they want to get this up. They can get it to 100% if they want. They just have to basically balance essentially profitability, making the program profitable, with increasing the number of users.
What percent of the 500,000 people do you think have purchased versus subscribed?
I'd say probably 1 to 200,000 are subscriptions.
Yeah, I will take the 100,000 part of that. And I'd say most of them purchased and at lower prices than what it is today. So, what do you think is the average price paid by the people who purchased FSD in the last 5 years?
Probably ten to $12,000.
I'll take under 10. I'll take on it because it went from 3 to 5 to 7 to what was it after 7? Was it 8 and then 10? Right?
I don't have the numbers, but I would just say if you looked at Troy's take rate plot over time in North America, there was a huge peak in 2019.
Exactly.
I mean, up
That's
to
the three thousand
50%.
dollar deal. That's the three
Right.
thousand dollar deal. Yeah.
So you want to weight that. I don't know how you want to weight that curve, do the area under the curve and all that. But there's since 2021, it's been under 20%, right, on new vehicles. So the majority of the high take rate, actually, just the majority of sales would have to be 2019 and 2020.
If you had a 20% take rate, every year their production has been increasing by, let's say, just 50% for simplicity here. If you even maintained a 20% take rate in 2 years later, you're looking at you already pushed your majority past the 2022 and prior purchase.
That is true. I was about to correct myself on that. That obviously the volume is much higher in the later years, but I didn't get to it.
Sure, sure.
Like, even if you're saying 50% bought at $3,000, they still paid $8,000 for enhanced autopilot and FSD. So that's still quite a lot of money. And then, you look at like, in October 2020, they raised the price to $10,000. So in the year 2019, Tesla only produced 367,000 vehicles. So even if you say, okay, 50% bought at 367,000, that's only 180,000 people. So if you say the take rate went to 10% in 2024, there's still more people buying it in 2024 than in 2019. So that's going to average the price, I think, much higher than you're anticipating.
By mid next year. Okay, so Omar said 12 to, let's say in a year or so. What do you think will be the number of users, both purchased and subscribed FSD users?
Total or percentage of fleet? How do you want to do
Total
this? By the end of this year, probably.
in a year. So we are in March. No, we're in
Oh,
February.
okay, you want to do you want to do 12 months from now.
Yeah, kind of, I guess.
I mean, we're not going to get numbers at that time. I think you should just do by the end of the year.
Okay, by the end of the year.
750, I'll go with.
750,000. Omar?
So, so we got 8 million Teslas in a year. We got 6 million ish today, plus 2 million. So we got around 8 million Teslas. If it was released all over the world and you saw the same 25% take rate, no increase in take rate, then you could expect 2 million users. But let's be conservative. Let's assume it doesn't launch anywhere except the US. So we know we've got 2 million Teslas in the US. If we had 2 million added, that's another 666,000 or so. So let's call it, 2.7 million-ish maybe. So 2.7 million times 25%, that would be about 675,000. So I think, let's see, that it could be anywhere from maybe 700,000 to 1.4 million, assuming US only.
Yeah. So your bottom, the bottom of your range is where Meta is, and I would take about that part too, maybe like closer to a million in a
Yeah,
year.
I just don't think it's really that good of an assumption to assume no international launches and no increase in the percentage of users who use FSD after FSD 12. So you're telling me like we did all that for nothing? They have this dramatic new version they've been working over a year on and more people don't want to use it. That would be a very surprising result to me.
I think
So,
you're right,
I think what you're
and
gonna,
I take
I
it
think what you're
back.
gonna, no, no, I think what you're gonna see is you're gonna see wider usage, like more usage by the people who do have it, but not necessarily a doubling of the people who own or subscribe to it just yet.
I mean, if you launch in China or Europe, boom, you're going to break through that million barrier like that. Because now you're opening up an entirely new market that's at zero. If they just go from 0 to 10% or 0 to 25%, that's going to be huge. Then I think you see FSD 12 also drive a higher rate. So I'm saying it's 25. I think it could go to 50. That's actually conservative, right? If it's really good, if it can do all of your drives, if it becomes driverless, it's going to be much higher than even 50%. So I think in the near term, saying the amount of users who opt into doing FSD could double, 40 to 50% within 12 months, just in the US market, for example. It's not really as crazy as it sounds.
Meta.
Yeah, I definitely take it back. I think I was being too conservative, not thinking about global. I was definitely thinking just US. However, even if we just look at just US, I think there is a large amount of stickiness to the feeling that we might be in a recession. I don't mean technical, whatever. I'm not trying to go by that, but just people feeling like inflation is high or what have you. And so people may just not purchase it because this feels like a luxury purchase people could avoid. If Tesla was to do something like, we're going to give everybody in the world, or everybody in who can purchase it, a 3-month free subscription, whether or not you have a referral, if you already have the vehicle, or we're going to give you even a 1-month free subscription, that could drive it up for sure. I could see people start subscribing. It's just a little bit challenging because think about the comfort and convenience that Amazon Prime provides you for under $50 a year. And this is that times 10x. Is it really that much more comfort? I'm not sure for the average family if it justifies it. They'll probably just drive themselves and save the money.
I think FSD as ADAS is going to take off when you can take your eyes off the road. Like I don't think even no nags will do much of a difference because if you have to keep your eyes on the road, you're still kind of, it does reduce the anxiety of driving. It does relax you a little bit more, but it's not a tangible thing. But I
I
think
don't know.
if you
I
can,
completely disagree.
if you can't take your eyes off the road and start watching a movie or have a conversation or do emails, I think at that point we'll get to 50%. You mentioned global rollout. I hope that happens soon, and I think that that might. But if you look at the EAP take rate in China, it's very low. And who knows what the regulators in Europe are going to do too. So we're really mostly talking US and Canada, I think. Meta?
2 questions. One, can you define takeoff when you say if, just curious what you think the take rate
Majority.
increases.
Take off would be more than, half the people that can use it do use it.
No, no, I'm asking a take rate, not use of the people who already purchased it.
Yeah, majority of people who can, um, you know, subscribe or purchase it, meaning like the country has approved it. So in US you can, right? But in China you can't right now.
Got it.
So
Fair,
I'm
fair,
only
fair.
talking about the base of the countries. So more than 50%, I think would be very good adoption rate.
And what do you think the adoption rate would be with no nag, assuming we're at 25 today?
Like 30, 35. So
Okay.
right now we're about 20%. No nag gets us to 30 to 40% range. If you can take our eyes off, gets us to 60%, maybe more. And then if you can take um and then it's just I think a matter of time above that. It's I think above 60% different conversation. Maybe like a yeah, that's a different conversation.
Yeah, I think that's fair because then you're basically saying the remaining 40% are waiting until they can make money off of it, which I agree with.
Well, so
No, I don't
that's
think this
I'm not
actually makes any sense.
go ahead.
Like, okay, you know, I mean, I hear this kind of argument a lot that, oh, well, so first of all, if you can take your eyes off, the take rate's going to be 100% or high 90s. Okay. You think there's an option where you could not look at the road, you could do what you want, you could use your phone and people wouldn't buy that? Demand would be, universal, especially at $200. It's just a no-brainer for the time you get back. If you have any value on your time at all, you're going to buy it. So
Well, there's a-
I
there's a
think you're
difference.
being
There's a difference between eyes off and you can kind of like do whatever you want versus eyes off, but you have to be attentive, giving 5, 10 second heads up.
I don't really think there's any difference. If you can take your eyes off, you can do other stuff. Even if it's beeping you, asking you to take over. Like, there seems to really be this misconception. And I think it's really kind of confused a lot of people what Elon has sort of been saying about full self driving. Everybody's just so obsessed with autonomy that they've missed this driver assistance market, which is actually bigger and making money compared to the autonomy market. And it's actually useful. Like a lot of this discussion is from people who don't really use this every day. Like, you got your fund managers or whatever, they probably aren't using FSD every day. So they don't really understand it. They go, okay, well, what's the use really? But people have been using autopilot with the NAG for many years. This is just a much better version of the software. And you talk to people who use it, they go, "Oh my god, it changed my life. I can go on a long drive and it's so easy, it's so comfortable. I can eat a cheeseburger and it's just so much easier to eat my food and I don't have to drive the whole car. I can just sort of nudge the wheel or whatever. I can, hold my wife's hand or my husband's hand. I can do all kinds of things. There are huge benefits, right? To sort of dismiss it belies the fact that there's hundreds of thousands of people spending billions of dollars a year. Goldman estimates FSD revenue is $1 to $3 billion a year. I think that they're not buying autonomy. I think that most of them do not believe in autonomy. They don't really believe that their car is just going to be driverless one day. I think that of the billions of dollars that are coming in from enhanced autopilot and FSD, most of those people just want to use the features that are available today because they're actually super useful. They'll completely change your life in the experience of using the car.
Yeah, yeah. I mean, I guess we disagree. I think that 100% adoption in subgroups that are amenable to new technology. I agree, but there are a lot of subgroups of people who own Teslas today. So I don't see 100% adoption of FSD as ADAS. I agree with in live chat, Ken says the real value of FSD is being able to put it on the robotaxi network to make money. I think that's when the game is going to change. But until then, 50-60% adoption rate is very successful. And for that, I think it's going to have to be eyes off for 5-10 seconds. You can do something else.
I think the income of people is a big factor. So I agree with Omar that there'll be a lot of demand, but I don't think everybody who wants it can afford it or can justify it. And as the car volume and the prices are coming down, I think it's fair to say that now many of the buyers are probably closer to average income. So you're looking at like 3 to 4% of their net take home pay being spent on this feature. And I'm not sure that they're going to see a 3 to 4% increase in productivity of their time to make that back.
Yeah, so Tesla could get the take rate above 90% easily if they wanted to. All you have to do is just say, hey, we're launching subscriptions everywhere. The number of users would instantly go up from that. Imagine if they came out and said, hey, guess what, you guys? This week only, you can buy FSD for $100. $100, it's activated on your car forever. Almost everybody would go and buy it, right? Even if they didn't want FSD, just because they realize they're getting a $12,000 discount. From that time on, the take rate would be very, very high. You'd have almost all of the users who had it. Or they could just say, hey, guess what? We're not going to have any upfront cost for FSD. We're actually just activating FSD on every car, and we're just going to charge your card on file if you use it per mile or something like that. So that's really the only reason 100% of users are not using it, because they didn't want that to be the case. They wanted to keep it around 25%. Why? Because you've got an accident rate of something like 0.36 per million miles. So if you have 25% of the users using it, you're going to have half as many crashes as if 50% are using it. If you have, you know, 100% using it, you're going to have 4 times as many crashes as the 25%. So just sort of managing that regulatory aspect of it, if you limit the users while you're still developing it, while you're still getting it below a human level of safety, working out all the kinks, then you're going to minimize the regulatory sort of surface of attack. And okay, you got these 25 users who are helping you refine it. Once it gets good, then you really turn on the faucet and roll it out to the entire fleet. So it's all about pricing at the end of the day. And they don't need to have any upfront pricing at all. The take rate of basic autopilot.
The typical, Silicon Valley bro, like, yeah, a few $100 or more a month, whatever. But Meta makes great points. People who actually make less money, or have a family, they're not just like, oh, let me just go spend a few $100 more for this cool thing, this little gadget that it'll make YouTube videos for. No, most people aren't going to go make YouTube videos, and that's how they're going to derive money or pleasure from having this as a product. It needs to have real value for them. And if I went to my wife and said, I subscribe for $200 a month for this, she's like, you barely drive. Like, what are you going to do with it? Like, you're just wasting our money. So it really has to have value for those people, or else it's not going to go up. And so now you're arguing about cutting the price, which we agree with. But the whole point was to say, if they don't change the price, what's it going to take to get to 50% take rate? And I just think so many people are buying the cars now that Ford aren't buying it with Tesla gains and splurging. And those people, we've seen it with the margins going down. Those people aren't suddenly just gonna be like, well, I got an extra $200 a month. Let me just go splurge it on something because there's no nag. It's got to provide probably more value than just not nagging.
First of all, I think the nag conversation is a little overblown. If you're looking at the road and you have your hand on the wheel, 90% of the time it's not going to bother you. People just like to complain about it because we want them to take it off. But it's not like it's actually stopping me from using FSD. So my buddy, he just got a Model Y and he quit his job. He's been doing some rides in between jobs, trying to just give people rides and stuff and make money, pay for the car, pay for his other expenses. And so I asked him, look, I got you the 3 free months of FSD. If you were to get out of the 3 free months and we didn't get you another referral, would you still keep it for the 200 a month because they might auto charge you? And he said, yeah, I would easily do it because $200 a month is $650 a day. With FSD, which I use more than 80% of the time when I'm giving Lyft rides, it does all the work for me. I'm more comfortable. I'm more relaxed. The car's still looking at things and monitoring things when I'm like checking my phone or something for a new Lyft ride. And if I can just do one more ride a day because it's more comfortable, more relaxing to use the software, then it pays for itself. And he said, you know what? More than that, I've noticed that when I'm using it, I get higher ratings, I get higher tips, people compliment me on the drive, and what else did he say?
I mean, I hear what you're saying, but I'm in Austin and I've gotten into hundreds of Ubers over the last couple of years. I haven't seen once someone use FSD. They
Well,
don't
they're
even
not allowed to. Usually they're renting the car from Hertz, and Hertz doesn't allow them to buy FSD. But if it's
yeah.
your own car, it's very different.
Well, we have one of those situations on the board right now, an expert in using FSD for Uber, Mr. Tez Ali.
Hey, Yaman. So, I'll talk about that in a second. But one of the biggest things I'm going to look for with this FSD rollout is when Tesla takes responsibility for somebody on FSD. If they say, when you're on FSD and something happens, we will take responsibility. I think that's when you're going to really get a lot of people that will switch because be like, hey, if something happens, it's Tesla's fault. But on the Uber thing, yeah, I use FSD all the time, and I get lots of people that compliment me on my driving. But I think overall, it just makes you a better driver because it will nag you. It will, beep at you when you're not paying attention or when you're kind of veering off the lane if you're not using FSD. So it's actually taught me to be a better driver overall. And I get a lot of compliments from riders saying, you know, that I'm a good driver.
Yeah, and you get
I
less
I
tickets.
I challenge I challenge if you are representative or like how many people do you know like that, Tez Ali, except for you?
How many people do I know that use FSD for Uber?
Right, you and Kaz.
Yeah, I
So
don't.
you already know at least four, right? Me, my buddy, him, Kaz, and you're saying people don't do this, right? I mean, every Uber driver uses at least basic autopilot when they're on the highway.
I hear the argument about the value. I think arguing over the value is like saying you're only going to look at the demand side and not supply side of pricing and that kind of thing. I don't think Machine is saying that it's not a valuable thing. I think it's just, will people be able to afford it? And the problem with the argument is we've gone to Uber drivers can afford it and it can make sense for them. I agree. It makes sense for Uber drivers. But again, that's because we figured out a way for them to get value out of the money that they are spending on it. So that's 650 a day, you can get an extra ride. Perfect example. But what percentage of like how much is that as a take rate increase? 50,000, 100,000, 200,000 Uber drivers? Like even if all the Uber drivers that have a Tesla switched, I don't think that that's going to get us across 50% take rate.
I mean, it's not just Uber drivers. There's a lot of people who drive for work. I've talked to other people who are contractors, who are real estate agents, who have to commute. There, one guy is doing a construction job in Indio. He lives in LA, so he's frequently doing these long 3-hour drives, and it's a game changer for them. But you know, again, I just go back to what is the take rate of basic autopilot? It's 100%, right? So why can't the take rate of FSD be 100%? It can, and it will be. What they're going to do is replace basic autopilot with the free version that's based on the new FSD 12 stack. And it'll probably just drive in one lane. So you'll be able to turn it on. Anyone will be able to turn it on for free and drive in one lane. And what I would do is just eliminate the upfront cost if you really want to drive the take rate high. So again, this is the core thing. If they wanted to push the take rate up, there is so much dry powder they have to dry it up. They haven't launched subscriptions even in Canada, let alone the rest of the world. There's so many things they can do on pricing. Guys, this is a piece of software that costs nothing to activate except a little bit of bandwidth. All the costs are fixed. Once you developed it, you already developed it. So you don't need to have any upfront pricing. You can just install it on everyone's car and say, look, if you want to drive in one lane, you can do it. And it's going to be incredible. This new basic autopilot, it'll go around, stop trucks, do all this stuff. But if you wanted to follow the navigation route to your full thing, then okay, pay us, not a lot of money, like $2. Okay, $2 to do this drive for you. And people will be tempted sometimes. Okay, I'm on a road trip. Sure, let me pay $5 and have it drive me to the next supercharger. Then, ooh, that was kind of nice. Okay, oh, my boss is calling. Yeah, let me go get the thing for $1. And then soon it starts adding up and you're paying $320 a month. And
Right.
you go, okay, let me subscribe.
It's just amazing to see Omar move the goalposts all over the field. Like he's moved it from one end zone to the other. Because he was initially saying the take rate's going to be very high at current price, and now he's saying, "Look, guys, we can just force people to take it, or we can make the price
No, I
zero,
don't
and we'll
think
get
I
the
ever
take rate
said
high."
they had to keep the
Don't
price the
interrupt
same.
me. You're interrupting me. It's unacceptable.
I've actually
Just
said they
look at
should
my
cut the
eye. Look me
price.
in the eye, and say you didn't move the goalpost.
No, all I'm saying is everybody's going to use this thing. I didn't say it's going to be the current price. I mean, my opinion is they could cut the price and actually generate more revenue.
Wow, that was deep analysis. Thank you.
Yeah, for the purpose of this discussion, we're assuming that the prices stay the same. So we're only just kind of trying to understand, adoption rate drivers. Obviously, lower price would lead to higher adoption rate, but that's another discussion. Machine?
I just want to add, actually, one point I agree with Omar with is he was saying that the nag is not a big issue. So if the nag's not a big issue, then that's not stopping people from getting it now. What's stopping them from getting it from now? It's the fact that it's not actually that reliable yet as a transformative service for shuttling people all over the place while they do something else. So that is still going to be the thing that really ups take rate is when people can do something else in the car.
Yeah, I agree.
It's closely related. I mean, we need the nag because it sucks. If it doesn't suck, then you don't need the nag.
I'm going to double down on what Omar was saying earlier. They definitely could increase take rate in many ways if they wanted to, but they don't need to. And because they don't need to increase demand, they don't have to gather more data. They have enough data. This means they're not paying for bandwidth and all the video processing associated with all the stuff coming in. And we can instead look at it like if demand did rise after V12, they could increase the price back to 15 from 12 and keep the take rate kind of where it is. Let's say the take rate's at the sweet spot where they want it to be. They have enough data coming in. They're not trying to make money on it right now. Then we can look at it as when they do increase the take rate through either lowering price or not raising price and allow it to kind of rise, then that might be because it's finally at a point where the March of Nines dictates that they need more data for rarer and rarer things. This would probably happen sometime, I don't know, one of the dot releases in V12 is my guess.
I agree with Meta in general, but I would say when he says there's no need to increase the revenue from it, I would say there is a need because the company is shrinking earnings or they're not growing. And that's why you have a crappy share price, which, by the way, could go lower because it's still pretty well valued. And if you're a long term investor, it doesn't matter, right? So that's fine. But if you're someone like me who's impatient and wanting to make sure you get on the ride, you don't want to wait too long if nothing's going to happen. It's not going to be a boost right now this year, and that's actually why. By the way, yesterday I sold the rest of my calls for now, and looking for a better opportunity because this company kind of sucks.
Oh, okay, relax.
I
No,
bought your
no, no,
calls. Just so you know, I bought your calls. Not financial
no, no.
advice.
Meta.
I think it's a good sign. He sold his calls. He's very wrong on a lot of these things, so hopefully this will work in our favor. Specifically, you just said something factually wrong. Their earnings are not shrinking. The growth rate might be slowing down. The margin might be lower, but that does not mean that their earning is shrinking. If they didn't sell FSD because the take rate's not high and they reduce the price, then their total possible earnings would shrink. If they keep the price high and they raise the quality of the product until people are willing to pay that price, their total earnings stays high. So it actually is completely counterproductive to sell off FSD at these low prices before robotaxi. It doesn't make sense. Maybe when Uber drivers are using it a lot and V12 is out there and people like the take rate's rising, that'd be a good thing. But I would predict before robotaxi, if the take rate starts to surge over 50%, they'll raise prices.
I just think people will laugh at the idea that people even questioned that people would want this as it becomes more widespread. Like, this thing is a life changer already today. And people are really overlooking what an amazing product it is today because of this long term goal of achieving autonomy, right? I mean, there's so many people who are just mad at them. Ah, you said you were going to achieve autonomy, right? Nobody's mad at their ADAS maker for making an ADAS that never gets better. But for some reason, they're upset that this keeps getting better and better. I mean, it's already doing drives end to end, like almost more than 50% of the drives now, I feel like, are zero intervention point to point. So, I mean, this thing is going to get to the point, I feel more confident now than ever, where it can go drop your kids off and it can do that safely. I mean, it's just going to be so useful and free up so much time that I really think looking back, people will laugh that we even had a discussion about whether people would want to buy this.
My sample size is small, but I will say I've been going on X, and as people are posting about their V12 experience, I've been asking like what percent of their rides are zero intervention, but also now starting to ask what percentage of the rides are zero discomfort. And there are a few people who have actually started saying uh, most of their drives on V12 have been zero intervention. One of them even said they were pretty much comfortable with it all, and the only time they were taking over was when they wanted to drive, or they wanted it to drive the way they want to drive, and it wasn't a safety reason they were taking over. So these are really positive signals. I don't disagree with the fact that people will want this. I think the only debate here is about affordability, with which I think you agree. It's by design. They're keeping it at a high enough price so that only a certain percentage of people can afford it, so that they don't sell the whole TAM at a cheap price.
So Omar, what percentage are you seeing no interventions on right now? And also, have you noticed that with my ADAS system, when I engage it, it leaves more room. It's a little bit slower, and sometimes people around me, I notice, start to drive more like an ADAS system. They leave a little bit more room. Have you noticed that?
Yeah, I'm not sure if I've noticed that. I think people maybe tend to go around you kind of in V11. In V12, it's much more natural. But, I am almost expecting the drives to be point to point zero intervention now. So I even kind of get upset if there's like an accelerator press. Having to actually turn it off is now getting very rare, especially since it can now pull over. I can put it in a new destination and it can pull out itself. Like, I don't turn it off that much. It can really do the whole drive. So I think this is what everyone's going to start seeing with V12. It's going to be able to do most of their drives point to point with no intervention at probably, more than 50% of the time.
Yeah. But do you think that will be enough to drive adoption rate to about 50% by the end of the year?
No, I think we can't look at adoption rate without looking at price. I think, if anything, I would say by the end of the year, price might go up if adoption rate starts to go up. Or alternatively, there's the other option that happens, which is they launch globally, robotaxi comes this year, and the adoption rate's at 100.
But I thought, hold on one second. So let's go to robotaxi scenario. I thought we all agreed that all Teslas, whether they have subscribed or purchased or done neither with FSD, will be added to robotaxi network if the owner chooses, right? So it has no bearing on FSD take rate.
I disagree. I think if you don't buy FSD, they won't let you be on the robotaxi network and make money on it.
Oh, there is no way. I will bet you 7 coffees. No way Tesla would exclude people just because they chose not to purchase or subscribe to FSD. Why would they? The equipment is there. they can just say something like, on Robotaxi, we share every dollar generated 50-50, whatever the revenue share is. Okay, open to all Tesla owners. But if you have FSD, whether you subscribe to it or purchased it, you can use it for yourself for free, or your friends, have it like a special person on your account. In that case, fine. But if you want to generate dollars on the platform, Robotaxi platform, then you just add it, you just share the revenue. Why wouldn't they do that? Like if I'm Tesla and you're a Tesla owner who hasn't purchased FSD or subscribed to it, I'm losing potential revenue by not allowing you. That makes no sense from Tesla's perspective.
That's a fair argument. It may be the case that maybe if you purchase FSD, you get a discount on the fee. So maybe you get a 70-30 split instead of a 50-50 split. I
I
hear what you're
think that
saying.
just complicates things. Because I think the easier way to say it, which is like, the benefit that Omar gets today is that the car drives him around and it's going to get better at that. So I think that once the software is at that point, a lot of people will choose to opt for it anyway. But I think to keep it very simple, Tesla will allow that revenue share for everybody.
They had some terminology in the FSD purchase agreement around robotaxi that you wouldn't be able to put it into other networks. You would have to put in the Tesla network, something along those lines. So I'm guessing
Right.
this might be a legal question of like, did they sell a product basically promising if you purchase this product, you might be able to be eligible for robotaxi? And maybe if they open it up to everybody, will that lead to lawsuits? There'll probably be lawsuits anyway, but it's just one of those things, right? If you're buying FSD today, what is it that you're purchasing maybe a little bit too nebulous.
No, I think they spelled it out pretty clearly. They just list all the things on the website. That's all it is. It's just those driver assistance features.
Yeah, exactly. Exactly. But again, I mean, if it's a robotaxi, well, obviously at least 80% of people will choose to subscribe or purchase the software anyway. So it's a bit of a moot conversation. Okay.
One of the
Uh,
advantages of having people purchase it is if you allow people to make it be robotaxiable, you're basically forcing that they're going to put the car on the fleet for a certain amount of time to make their money back. And if they don't, you're guaranteeing that you're at least making a certain amount of revenue from every single car that could be a robotaxi because people have the opportunity to do so for you.
okay.
I think
But
that if you don't have FSD, you'll probably pay 50% of your revenue. If you did buy FSD, it'll probably be more like 30%.
okay, so you think Tesla will vary the revenue share depending on whether you've purchased it or not. Um, I think one way we can kind of word the bet is, when will Tesla FSD reach 1 million users across the world? When will, and I think that's probably going to be announced either in the earnings release or a post something. It's a major milestone, 1 million users.
I would hope they could do it this year.
Meta?
I'll take halfway through next year. And I'm probably going to be wrong and I'll be happy about it. But these days I'm feeling more conservative because I've been wrong.
Yeah, same. I'm the same way. I'm the same way.
We have to take the feedback. Otherwise, we're not letting backprop work in our brain.
Yeah. This is actually a good transition to the other topic, Nvidia, a little bit. So Bradford in yesterday's space said, by the end of this year, Nvidia will double supply. And he also said that Tesla is fifth or sixth in the backlogged wait list, behind Meta, Amazon, Microsoft, etc. So what does that mean? So I think machine interpreted it earlier in an earlier space that we're hardware training limited until end of the year. Do you guys agree with those statements?
I think there was an interesting comment on the earnings call. Um, and this is partly why I feel like I need to dig a lot more into NVIDIA because I could definitely be wrong. The fact that they said they had 35 to 40,000 parts in their, I don't know if he was talking about the Hopper or the DGX, but That surprised me. I didn't know that was that much more going on beyond the chip and the casing. So there needs to be a little bit more on my end to understand the technical side of things. I'm much more on the software side than hardware here. But it could be the case, where I could be wrong, is that maybe like the battery BMS Tesla built, Nvidia has built something that layers on top of the chips, which manage the power, heat, or whatever it is in a unique enough way that's giving them some kind of advantage. I have no idea what it could be, but that's something to look into a little bit more.
Omar, what do you think?
About being compute constrained, or
Yeah, training compute constrained and what Meta just said too.
yeah, we need to build a lot of training compute. So, I was just looking at the CVPR talk and they said, hey, we want Tesla to be a world leader in training compute. And I said, is Tesla a world leader in training compute? I don't think so. Seems like everybody else is buying a lot more GPUs than them. So, how exactly does Tesla become a world leader in training compute? Either A, they spend a lot more than they've been spending on NVIDIA chips, or B, they actually make Dojo work really well for training FSD 12 and they scale it up like crazy. So it seems like maybe we're kind of waiting for Dojo 1.5 or Dojo 2 to kind of scale up. But that's really what Tesla needs to do is like add more compute than anyone else in the world. That's kind of, training, just play stakes for playing in the AGI game, really. You need to have like more compute than anybody else, or at least an equal amount, right? Elon sort of saying, hey, well, we had a text to video model that we actually trained on our data set, and we could actually probably train it on some non Tesla fleet driving videos, but we're too compute constrained. Well, they shouldn't be. They should be doing that stuff too. Yeah, make your own Sora. Why the hell not? If the team's doing it, if you can dedicate some compute to it, like, let's build some AGI. So that's really the constraint now, much more than the engineer. Before, we needed that really smart engineer who knows PyTorch, who knows C++, and can really optimize that algorithm, you know, give you great runtime performance on the CPU. Now we're less dependent on that to get better. It's more actually just finding the data, bringing it in, and training on it.
Is V12 performance limited by NVIDIA's ability to ramp?
No.
Oh, wow. You guys both disagree with that statement. Meta?
Yeah, I'm gonna try and describe this with an analogy, if that's okay. But have you heard of dark fiber? Are you guys familiar with that, or should I explain what that is?
I'm not. Would you please explain?
Okay. So there was a time before like the internet had really taken off where all these telecom companies were laying down fiber optic cables to connect like Europe and North America and Asia and all these things. And they spent all this money at the very outlay, started putting all this money down and having these ships go and lay all these pipes down with thousands of like fiber optic cables because long distance calling was making a lot of money and it was finally taking off. As they're laying down these cables in the middle of their projects, somebody figured out how to use a light splitter and just have each fiber optic cable carry different bands of light. So each cable could carry like hundreds to thousands of times more signal. And suddenly they're like, oh shit, we overplanned because they already overplanned for capacity. And now they're off by like a couple orders of magnitude. So they just thought, well, shit, we got to finish laying these cables down. Otherwise, we can't connect the continents and we get zero value out of it. But all this other cable is just kind of a waste. That stuff was called dark fiber. Google came along, understanding the value of the internet before data centers were really, a big thing, and they just bought up all that dark fiber or signed like 99-year leases on these things. There's a book called Dark Fiber, by the way, which talks about all this stuff. Um, and that became a huge advantage. This same scenario has occurred many, many times in tech where like we over provision on hardware, a great reduction comes along, and then there's this glut of compute or resource, and then somebody comes up with another use case, and then all that stuff starts getting used again. We overbuild, then there's a glut, and it just keeps going back and forth. And I think if you look at things like AlphaFold, Alpha Tensor, Alpha Dev, all these Dora LoRa approaches that are doing huge reductions, the fact that like the Gemini 1.5 paper talks about how it costs them less to train that smaller model, which is outperforming their ultra model as of 6 months ago, the trend line's clear that the cost of training is going down per iteration. So I'm not convinced that you can take today's or a year ago's training needs and just project it out and claim that's how much hardware is going to be necessary. I think it's going to clip off at some point.
Omar, what do you think about that?
Yeah, I agree.
Meta, don't you think AGI changes that though?
No, AGI makes it so you need even less hardware, because then you can just like there's an example somebody posted who has access to 1.5. They fed in an entire code base and they asked it to find bugs, and it found the bugs and asked them to fix like suggested fixes. When you do this, now suddenly you don't need to hire a CUDA developer. AGI is your CUDA developer. You don't need to be tied to CUDA. You can actually have AGI be as good of a Mojo developer as it is a CUDA developer, and you're just completely hardware agnostic. So all those optimizations, like I forget what it was called, but there was another AI that came out that basically looked at compiled code, assembly code, and it optimized assembly code. And the GCC compiler has been around for a very long time. It's extremely efficient at compiling C++ code. It's considered like, one of the best software achievements that's allowed us to get to where we are as a society. And this AI comes along and was optimizing the code that was output from that. So I don't think I don't think we should assume that the efficiency of the hardware as it is today is going to be the efficiency in a few years from now. Just like the trip compute in the hardware 3 cars. Sure, the model size that fits today is the model size that fits, but that the quality of those models is going to grow exponentially for quite some time. I think we're hitting a Moore's law point, Wright's law, whatever you want to call it, with AI when it comes to model compression and quality for smaller models. Smaller models means less training compute and less inference by a long shot.
Yeah, I don't see us having a shortage of training compute forever. So, right now we're in a shortage of training compute situation. Nvidia says their orders, their demand is roughly double what their supply is. So, the amount of orders they have, they can only deliver half. That's resulted in a situation where the price is double what it should be, 40,000 instead of say 20,000. And actually AMD, they're selling their chips for 20,000. So they're projected to take about 10% of the market. But we're really emerging from this situation where first of all there was a chip shortage, there was a pandemic, there was a lot of disruption and volatility there, ports being backed up, that type of thing. But then on top of that, you just have this explosion of AI demand that nobody really saw coming. So the economy is really good at serving the needs of the market. When the market demands something, when the market says, hey, I would like to spend $1 trillion on this, the market tends to produce it. But the nature of chip making is such that supply is not that elastic, right? It's not like, oh, chip prices are going up for training compute. Let's just turn up the factory, right? Well, no, it doesn't really work like that. There's no idle capacity just sort of sitting there. The capacity is typically utilized at, nearly 100%. And you can't just bring up another location overnight. So there's some inelasticity of supply that will be cured. You're having, for example, AMD chips come to the market, Dojo, Microsoft bringing their own chips, everybody trying to serve this thirst in the market for training compute, and the market will deliver training compute. This is not going to be a long-term shortage. So I see the situation only kind of getting better in the future in terms of the availability of training compute.
So let me see if I can convince a stronger argument, which I'm clearly going to state my bias as I work in this space. I'm very much biased, but I'm purely on the software side. But tomorrow or a month from now, let's say a new paper comes out that teaches people how to cut the cost of compute by 50%. What happens to NVIDIA's backlog of orders?
Cost of what, inference compute or training compute?
Well, Nvidia said inference is 60% of their sales today. So we could say
40%.
oh, 40? Oh,
I
okay, I
think
got
they
it.
said 40, right?
I
It
might
was
have flipped
60 or
it.
40.
Yeah, it was 60/40. I figured it was which was which is which. Um, but let's
Yeah, I
assume
think it's 40. Yeah.
okay, let's assume inference for now. If you assume inference gets cut by 50% or more, that would mean that their backlog of demand would drop by like 20% at least.
Are you surprised by the 40% figure, Meta? A lot of people sound surprised about with that figure.
I'm not surprised by it. I just am very curious how they came to that number because a lot of the things on the call that they announced weren't things that were theirs. Like they were bragging about their customers' accomplishments as opposed to their own. And I don't think their customers are telling them what the inference versus training split is. And I suspect the reason why they were kind of addressing that is because a lot more of their customers are replacing inference on their own. So if anything, they want to show that inference is maybe not a big part of it because that won't cause them to lose a lot of customers.
No, I think the reason why they're saying that is because some people believe training compute demand is not going to grow forever. And once it switches to inference, once need changes to inference, like you said, a lot of the major players will build their own ASIC to do the inference. And so NVIDIA is saying, look, we're actually helping them. We are a player in the inference side as well. So the
Inference is,
question
yeah.
is, so the question is basically what AJ said yesterday, space. He said, look at Tesla. They want to do Dojo, and they're still buying H100s. It's not that easy to build it in-house. And then you said in the same space as a response, well, Tesla and others did replace NVIDIA on the inference side. So the question is, my question is it really easier to replace NVIDIA on the inference side versus the training side? Is there a reason for that?
Yeah, because the thing with inference is you are one derivative away from like hardware changes. So like on training side, there's a lot of active research on different processes for training, different reduction techniques, there's all these different, like maybe like 10 different fields of study. I'm just making that up, but hand wave of different things that could result in different optimizations, which change the load profile on your hardware, which then says, oh, we had an adder, a multiplier, and a subtractor, and we were using them all equally. Then this new technology came along from a software side, and suddenly the adder is twice as popular. So in the next hardware cycle, we're just going to put twice as many adder chips or blocks as the other two. Then another, innovation comes along. They're like, oh, suddenly the multiplication's 4 times more popular than the other two. And so there's this constant like updating of the training blocks ratios to each other that's happening. Whereas on the inference side, that's not really that common because inference is like your output is running on it and the manner in which it's being made is different. So like to put it into an analogy, the cars are all driving on the road and inference is like the road and the infrastructure, but the factories that are making the cars are seeing a lot of change in how they make those cars, whether they're electric, casting, etc.
Okay, temp button.
Meta, have you seen Grok with a Q?
It's on my reading list. I don't feel
So,
comfortable speaking to it yet.
so it's about 5 times faster inference with dedicated hardware, and it's been all over for about a week now. So they're the AI darlings, and it's the hardware is optimized just for inference, very much quicker, and it's right now it's only running out of the box Llama and Mixtral. Um, but in the future they'll be able to train weights, I believe, with it. But yeah, so it's happening.
Yeah, and I
Okay.
believe that the
Well,
key innovation that they had is that they have figured out a way to do pipelining for inference, which was Intel's big breakaway from, the old architectures back in the day when they figured out pipelining and branching. And so I think I need to read more into that paper before I speak more detailed on this, but that's a great example of somebody could come along and disrupt NVIDIA pretty easily if they have the ability to manufacture enough chips.
yeah, and if you just look at the chip, you could see it looks like pipelines. It's like super simple compared to the image of the Nvidia chip.
I think the interesting thing about inference is I really have no need for an H100 for training because I don't really train machine learning models myself. I use other people's models that they use. Like, for example, I might inference like Llama 2 or Mistral or something, or I might develop some startup project that uses these models and want to inference them on an H100, but I would probably never use it for training. So if we sort of develop these AI applications that use the inference computer, then you might have a much wider range of companies, your sort of Fortune 500s, your Pepsis, your Cokes, who don't necessarily have the expertise in training these models, but can maybe, hire someone to train a model for them or something like that, and can then use it to inference. Now, the interesting thing about the implications for the unit economics of these businesses is they have this huge data center cost. I mean, these are like, $40,000 boxes here. So, you're really spending millions of dollars. I think Elon said it was like 500 million they spent on their H100 cluster with InfiniBand networking and everything. And so you have these sort of massive costs, and then your Chat GPT, and you need these, um, inference compute units to really serve the users. And you're really the growth in usage is really kind of constrained by your data center and the need to spend to not only buy these things but run the data center, cool the data center, put electricity through, hire people to maintain the data center. So it's a very different sort of cost equation compared to what Tesla's done, where they actually have a custom inference chip that they've put in the car. And inference kind of scales very cleanly because everybody's just got their own inference chip right there. And you don't really have to worry about going over capacity or one guy causing an issue for another guy or something like that. So it's definitely really great what they've done with the car computer. It saved them a lot of cost as well compared to when they were going with Nvidia. And I think that there's no doubt that in time they'll do it on the training side as well. You look at Google, for example, they've disclosed that they're doing about 90% of their training on TPUs now. I think they're on like TPU v5 or something. So Google did it. Others have done it. You got AMD and others coming to the market now. Tesla, I think, will get to a point within the next few years where the majority of their training workloads are performed on Dojo, I think.
So Google launched Gemma on the same day as NVIDIA earnings call, and NVIDIA spoke about how the Gemma model was optimized for the NVIDIA chip, which is interesting because I would have thought the Gemma model would be more for like R1, Snapdragon, like things that are in, people's phones, the tensors, all that kind of stuff. So the fact that it's optimized for serving architecture and it's 1/10 or smaller compared to most other models tells you that there's already this great reduction in inference demand that's happening. If you can take the 7 billion parameter model and replace a ChatGPT 3.5 and it serves your use case, why wouldn't you do that? You can now put 10 to 20 or maybe even more servers where or sorry, you could serve 10 to 20 times more traffic than you could before. And now you could actually run it in your own cluster because it's open source. You don't have to worry about data privacy and all that other stuff. It's not like Llama's not going to have a Llama 3. It's not like Mistral's going to keep developing. Like the open source small model space is just getting started. And we're already starting to see these models start competing with what used to take a data center, at least in certain domains, right? It doesn't do deep reasoning, but not everybody needs that. That's not a thing that every single developer who's trying to do something needs.
Yeah, I agree. And, so I just tweeted the bitter lesson, which is kind of this famous essay, and really leveraging computation is a great wave to ride because you got Moore's Law, Gordon Moore, the founder of Intel. He observed that the number of transistors you could fit on a board, decreased every 2 years at a predictable rate. And this has really driven the entire industry. The cost of computation has fallen. You can pack more and more transistors, more and more performance into a wafer at a lower cost. And this, for decades has been going on and doesn't see any sign of stopping. So I think it's a really good wave to ride on. Like, I would definitely encourage people, check out the link that I just tweeted and give it a read, the whole thing. So the first sentence, the biggest lesson that can be read from 70 years of AI research is that general methods that leverage computation are ultimately the most effective, and by a large margin. The ultimate reason for this is Moore's law, or rather its generalization of the continued exponentially falling cost of computation. So, having this general method with V12 that just leverages the fact that we keep getting more and more compute, and compute keeps getting cheaper and cheaper. I know right now it seems like kind of a weird situation because you have this explosion in AI demand, and there's a shortage of training compute, and it's very expensive. But if we look at the history of computers, it's very clear. The cost of computation only falls, and our chips just keep getting better and better and more plentiful. So that is essentially what V12 is. And when you see Tesla saying we want to be a world leader in compute, we're adding all this dojo, exaflops of compute, they're betting on this wave. They're betting that all this excitement, this AI boom, this is what needed to happen for FSD to become a thing. All these billions and trillions of dollars. Sam Altman talking about $7 trillion going into chips. Those other chip makers are talking to their investors, putting trillions of dollars in this too. And that's a wave Tesla's going to ride. They're not going to be spending the trillions, but they're going to be able to leverage that increasing computation and the data in their fleet to train a model that is superhuman. We're already starting to see it. We're already starting to see how it's exceeding humans in some ways. And it's really only a matter of time now before it has superhuman reliability as well. So just read the whole essay. They talk about chess and how originally they were trying to design a chess system that had all this knowledge of chess, right? The same way we were trying to design a driving system that had all this knowledge of lanes and what you're supposed to do and so on. That all ended up being bullshit. The method that worked was just brute force it. Just check every possible move that could be made and see what percentage of them end up in you winning, what percentage of them end up in you losing, and just pick the one where you're more likely to win. And that ended up working. Just a simple method that leveraged computation. And as computation increased, computers could do this faster and faster and faster. So, yeah, just give that a read.
Yeah, and just for folks that are not in the tech space, this has been like a regular thing. Even before COVID and all the supply chain stuff, there was a RAM shortage in like the like 2018, 19s. There was a short USB cable shortage, which is a funny thing because people are hooking things up in data centers. There's been an SSD shortage. These things come regularly in capacity planning for data centers and things like that. So this is not uncommon. I think it's just that this is the first time a hardware shortage is making press because it's on a company's earnings.
What's your guess for the top of this?
I mean, I was wrong, but I assume it's going to be in a quarter or two. Like, I don't see how you survive going out
You
there and
were
saying,
hold on. You weren't wrong. You weren't wrong, right? The this
fair,
this stock is only up to about a couple days ago,
sure.
and your entire thing is about the longer term, aspect of this company and the stock, Nvidia. And we mentioned many times, numerous times, every time we talk about the stock can go higher in the near term because of the momentum. As Omar mentioned, I mentioned, you mentioned, Machine never mentioned that actually. Um, but I think everyone is on the same page here about, training compute demand is not unlimited.
Yeah, and I think,
The question is, can Nvidia partner with these major scalers to build their own inference chip? or sell them a better inference chip than they can build themselves? Can Nvidia be a major player in the future on the inference side? Because I think everyone here agrees, all the experts here agree, that really the future of AI chips is about inference, not training.
I mean, it's training for very limited group and then
I mean, you
inference for
can't
the
do any
rest.
inference without training.
But the training is going to get increasingly efficient. I mean, we're talking orders of magnitude more efficient, correct?
No, I think
I don't know. We
inference is
might
going to get more
discover
efficient
some new
first.
method of training that's even more complicated.
Yeah, yeah.
But, generally it's going to get easier, I think. Yeah.
Current trends are reducing costs on inference much faster than on training. The training costs are coming down, but I would argue the demand for training was really, really high and it wasn't being met by the hardware already. So it's difficult to like enumerate how much of a reduction
I
is
mean,
actually happening.
yeah, training's going to be much easier, but not because we're going to do less training. We're almost certainly going to be doing, 10 times more training. But I think, or I'm hoping, I'm betting that the market is able to better supply that training compute at much greater quantities at much lower prices than the market's supplying today.
Machine.
I mean, I agree with all these points. I would just say there's induced demand that as training costs or inference costs go down, that's going to grow the market for who wants to use those services. And it's hard to model all that. I mean, I didn't realize that, and think about when I listened to the earnings call yesterday that, every sovereign country might want to build their own data center to protect their own data. Then there's all these possibly smaller companies who can't afford it now, but in the future might um, build out some sort of training computer inference platform, and all these variables, like from a big picture, could go one way or the other at some point. So I would simply just listen to the company and what they say. And right now, in the shorter term, they're saying they got a lot of demand and margins going up currently. So if we're looking over the next year, it seems to be on a pretty good trajectory. That's going to change at some point. We don't know when. If you're someone who wants to short the company like Meta, I would wait until there's an earnings call that shows a drop in demand, a drop in sales, a drop in margin, and short the stock then. I think that's the best play.
I mean, okay. We don't have to talk about my trading strategy. I did not short the company. I just want to make it very, very clear. So don't put things out there that I didn't do.
Wait. Did you sell a call spread?
I did at a 10% rise, and then
That
I
is still
in the
shorting the company.
hold on in the aftermarket after the earnings, I purchased stock and it reduced the overall cost, and I didn't lose that much. It's a very insignificant amount for my portfolio. So it was just more of a I'm trying to put my money where my mouth is, trying to force myself to reason a little bit more. It's a discipline thing.
But if your money where your mouth, you're a long-term investor. So your true money where your mouth is would be either
Agreed.
to sell a long-dated call spread or buy a long-dated put, with multiple years out, because that's what
Understood.
you believe the share price is going to go down.
Agreed.
So you should do
Agreed.
that.
I
Not play the
will
earnings.
I will do it after I've done some more research. How about that? I am trying to get. Is it okay if I disclose it, Yaman?
Yeah, up to you.
All right. Yeah. I'm the person who hired Yaman to prove me wrong. So I'm trying to find reasons why I'm wrong before I go and make any kind of you know bet with real money. So anyway, back to the main point that I want to make here. The earnings did cover some things I did not expect. That's the things I was wrong about. The fact that they're claiming that medical researchers are coming to them, that they're opening up an API, that they're creating a cloud offering. That's really interesting because this is a new thing NVIDIA is doing. Traditionally, they sell the hardware and then Amazon, Google, Microsoft make the APIs for people to use. It's going to be very interesting if they get into that space because I don't understand why a company who's even working on anything would go to NVIDIA to use their hardware in a cloud. Let's say they even stood up a cloud. Why would you use NVIDIA's cloud as opposed to a third party's cloud who has a model that you can use as part of the cloud that you're in? So, like Microsoft obviously has OpenAI, you can use their cloud, you can use their AI. Amazon's going to have to build one. Google has one. Why wouldn't you just use those? Or you would probably use open source models. And then if you're using open source models, then I would assume that you're cost sensitive. And if it comes to that data argument that Machine is making, I don't think that holds out because that was true for servers too. And people have gone to cloud and cloud has taken off.
All right, just a housekeeping item. At the top of your screens is a recording of episode 19. It just got published because I think YouTube is kind of backlogged with content creation and they're taking a lot of time publishing things and checking things, etc. before they publish. It was supposed to go out this morning and it just went out. The problem is everyone who would listen to episode 19 are in the space for episode 21. So right now it's like the by far the worst performing initial figures for this episode. And I wonder if I'm just kind of creating too much content here.
I don't know if that's a bad thing.
What's that?
Oh, wait, I was going to say, I don't know if it's a bad thing, but I take it back. Uh, Regulate how much time you spend on it, and then maybe it's not a bad thing.
Yeah. All right, I didn't mean to interrupt. Machine, go ahead. What do you want to respond to that? So if you, just to make up for it, if you guys could please like and repost what's at the top, I would appreciate that. Machine.
I didn't have anything to say. I don't know what Meta you said. What was my argument about data? I'm confused.
You said every country might want to create their own data centers and force like the data to stay. I think China's unique in that way. It's possible other countries do that as well, but I don't see what is unique about AI models and the data that's associated with those versus regular server architecture with CPUs and disk and all that stuff. Because GDPR exists, there's country regulations, data has to be in certain countries that already exist. And I don't see how those regulations differ for AI than they would for non-AI.
Yeah, I'm not sure. I was just listening to what they seem bullish on it. But you're right. I mean, all I could say is that right now, the CEO of Nvidia seems to be more truthful than other CEOs that you may be interested in, who will say things like demand is fine, then slash prices. I mean, you guys remember from you remember Q4 2022 earnings, right? I mean, it was this whole bullish thing, and then whoops, actually no, demand did crater.
Yeah, but we're talking about forecasting and honesty. These are two different things. Let's put that aside for a second. I think the problem I have with the call, for me personally, I still need to dig into these things, is some of the claims like we're going to have cloud compute coming. I don't know how that's true. I also don't know how, like, what is the advantage NVIDIA is going to suddenly develop in building data centers and running data centers efficiently when they have never had that before? And many other companies have struggled to get into that space. Even Microsoft is not very efficient at it, right? Their downtime is really high. That's partly why Azure was never popular, and it was Amazon or Google for a long time. And Amazon was winning because they had the better APIs and they had better software around everything. So unless you have that API, you have the data center computational efficiency, you have the global footprint. Cloud is not an easy place to get into these days. You have to actually start really, really big.
And now Microsoft is crushing, right? Meta?
I don't know if they're crushing. I think they're doing better than they were before, but Amazon's still bigger, right?
Yeah, I'm not sure. I know Azure's been growing like crazy and is responsible for a lot of the profit at Microsoft.
Yeah, the hard part is when you have when you're the smallest of the big three, it's easier for you to grow. Google Cloud was also growing really rapidly, but they're the one network that has both reliability and custom models. I think all three of them are going to have custom models and reliability and cost and all the how efficiently you can run your data centers is going to be the differentiator at the end of the day. I don't think if you're building an app and you're using a model to like, I don't know, make some funny faces or make dating profile recommendations, I don't think you have any loyalty to which backend you use. You just use the cheapest one.
So I wonder how much of a network effect there is for the NVIDIA chips. It seems like there is much more of a network effect than people suspected because a lot of the software is optimized for NVIDIA. What do you think?
I think that's true for a while. I think a lot of people think CUDA is a moat. I am in the camp that I don't think that's the case. I think AI models are already showing the ability to transfer code very efficiently. I just posted a little while ago, somebody posted a video of them doing a task and the model turning it into Selenium tests. There's literally people whose job is to do this. So like, this is going really rapidly in a direction where I don't think software moats based on API boundaries are going to really be a big differentiator. But again, I'm really bearish on Nvidia, which is not normal for me. I usually try to find companies to believe in, not to find companies to not believe in.
Machine.
I think when Meta goes home, he has a big poster of Jensen Huang, and he throws darts at him every chance he gets.
I like the guy. He's changed the industry. I'm not saying anything negative about him. I'm just saying I'm confused about the future.
Machine, where do you think Nvidia peaks? Market cap.
It's going to go over, I would say, about 2 trillion. It's hard to time exactly.
Is that it?
No, I mean, okay.
The question is where it's going to peak.
Peak for whatever.
Let's say before the next recession.
Yeah, it's hard to say for me. I think it really depends on all these factors that Meta brings up, which I think are legitimate long term. It's just the question of when do they show up, and that timing is really going to affect when the dip happens, right? Because Nvidia's they're worth 1.6, 1.7 right now, based simply on the earnings that they're generating and the growth that they're having. And
Yeah,
if that,
you're basing that on, again, like I said yesterday, you're basing that on a annualized Q4 figure that clearly does not reflect a balance in demand and supply. So that's kind of like saying if I took Tesla's, Q2 2022 margins and I annualize that, then my PE is 20, 30. That's not the way to go about that.
we
That's a
all acknowledge
gross misuse of the PE
it's not
ratio.
misuse. No, it's
So
not.
bad that I think that should be a federal crime.
You are so out of
Well,
control. And we
I mean,
both know that it's all about estimating future earnings. That's how you value, and discounting backward, and that's how you value a company. And the PE ratio is
Are
just
you
kind of
telling me
setting the
that
ratio.
are you telling me that their margins will continue at this level?
I believe their margins will drop, but we saw AJ's
Okay, right
projections. Wait,
there.
listen,
You
no,
just argued against yourself.
no, I didn't, because what I'm trying you're trying to talk two ways out of your ass. Okay, I said it's going to go up. I'm predicting 2 trillion because I believe the margins are going to be sustained for most of this year, which
Yeah,
will
nobody cares about $2 trillion. The bet I have. Listen, the bet I have with Wes is it going to see 3 trillion or 1 trillion next?
I think it'll probably see 1 trillion before it sees 3 trillion. But
Okay,
I
then
think
you and I agree.
yeah, but I believe it's going to get closer to 2 first.
2 is fine.
Yeah.
It already was at 2, wasn't it?
No, it's all-time high right now, and it's like what 1.7. I don't know, probably 1.7,
No, it's more
1.8,
than that.
1.8 now. So I'm pricing, my strategy is pricing for around 2 trillion
It's
in cap.
1.9, dude. What are you
Okay.
looking at? It's already at 2 trillion. We're at 1.94, and you're like, it's gonna get to 2.
All right, it's going to be 2.2 trillion. There,
You
I'm
don't even know.
updating.
You see, this is what I mean. Like the people who are arguing that this stock is gonna go up don't even know the current market cap.
No, I believe it just went up like 18% today. Okay, I was thinking in my mind
Well, can you not do
yesterday.
math?
I did math. I did math yesterday and say, oh, crap. If they just grow earnings this year at a slow pace and generate, let's say, between 20 and 25 EPS, then based on the market for some period of time, still assuming there's going to be some growth, that assigning a P ratio of 40, that it was be priced above $900. And that will be a temporary phenomenon, but it will be a phenomenon I believe will happen. And therefore, that's why I bought more
Okay.
calls.
So you're
And
doing your technical analysis, you're looking at round numbers and all that, and you're not even looking at the market cap. You have no
no,
DC. Yes,
I did this before. I did
you haven't
market cap
listened.
and
No, no, no,
operating
no, no.
income.
It's very clear what you're trying to do. You haven't talked about intrinsic value. You're kind of like margins will probably decline in the future, blah, blah. You haven't talked about any other stuff. Whereas on the other side, we have Meta, who clearly have read a ton of papers. He knows inside out all the competitors, has done his research, and is taking the opposite side of you. And I know which side I'm on, just based on that, to be honest with you. But
You two jokers are already down. I mean, do you realize
listen,
how much
why
money
don't you do this?
you've
Meta
lost?
just said that he hired me for the devil's advocate to argue the bull side of Nvidia. So I'm gonna be doing your job. I'm going to be doing your job. Why don't you just sign up for that devil's advocate and learn how to do your job?
I prefer to make money. And you two, you're spending so much time trying to squeeze out a few more YouTube subscriptions. You could have taken some of that dumb Tesla money and bought Nvidia at some point in the last year, last 6 months, 3 months ago. Three months ago, they had printed over $3.70 in earnings and a massive acceleration. And we're like, wow, like this stock's going up. And did you buy? No, because you and Meta are just blinded by your loyalty
Listen,
to other companies, and you can't possibly
Meta
believe
is reading papers called "Attention is all you need." All you're saying is
it's from like six
momentum is
years
all you
ago.
need. Whatever, man. Whatever.
Okay, hold on. Machine. I'm sure I could find some penny stocks where if I just look back 3 months for the rest of time, I would be the richest man in the world. That it's such a shitty strategy to be like 3 months ago you could have done this. You got to be forward looking. You got to claim based on these reasons. This is my
Yeah,
thesis,
but
right?
we
Okay.
talked we talked about
So
it that months
listen,
ago.
you just made yourself look like a fool because you
You
didn't even know the
two
market
are
cap.
just
Okay.
jealous. You're
Can I just move
jealous.
on to speakers that actually know what they're talking about? Omar, go ahead.
Well, so you just look at Nvidia. Their top line growth year over year is 233%. It's like, wow, okay. This is what we call like eye-watering growth, right? I mean, this is why the stock is running up so much. It reminds me so much of Tesla in so many ways, but even grander in scale in some ways. And I mean, this company is just experiencing insane growth, right? So this is really the fundamental thing here. It was really in the dumps when people said, okay, crypto's over, whatever. But this explosion in demand for AI chips has delivered insane growth. And data center is now like 80% of their business. So this is a company that was known for gaming graphics cards, crypto related stuff. Now it's like 80% mostly AI related stuff. So you just kind of think long term and you go, okay, so is the market for AI training and inference going to get bigger or smaller? Is it done growing? Is it going to start growing slower? And it's like, well, no, this is actually just the beginning. If it's possible to replace human labor with inference, then the economic value of training and running these AI and AGI type models is going to be massive. There is a path here for Nvidia to become, I think, more than $3 trillion. Will they hit 1 trillion first? They very well might, but this is a market that looks like it's going to be experiencing long-term secular growth. We're talking on the order of decades. Now, is Nvidia going to maintain an 80% hold on the market? Of course, absolutely not. We can almost certainly say that they're going to be eroded. There's going to be probably growth in AMD. Maybe, Tesla becomes a major competitor that steals some customers for them. Right now, they're kind of a partner, but also a little bit of a competitor. Maybe Dojo opens up as a service. Maybe you've got some other players who don't even exist yet who emerge. So, of course, their hold on the market is going to be less. Are they going to have the pricing power they have today? No. But if a market is growing fast enough, you can afford to lose quite a bit of market share and still grow as a company. So, just based on this theme of the explosion of AI, which, may have some limits, could turn out we're just getting overexcited and you can't really replace human labor with AI, but it really seems like that's where we're trending to. Then, maybe the growth slows, but it does seem like there's a long-term secular trend towards demand for compute for AI training and inference. And Nvidia is currently the market leader in this market. They kind of created the market in some ways.
So
All
they
right.
played. Oh,
5, 10 more minutes, and then we're gonna end the space. We're gonna continue the conversation tomorrow. It's been going on for about 2 hours. I really appreciate you all being here. After about 5 minutes, we're gonna end this space, and then we're gonna do an after party on live chat as we re-listen to the space while I record. And the live chat continues sometimes on the topic, and sometimes on other topics. And and then I need to go for a walk while I edit episode 20. That's going to come out tonight. This is episode
Wait, you're
21.
gonna go for a walk while you're editing?
Yeah, I do editing sometimes while I'm walking, at least the parts I can do. And then, um, but the
How do
phone
you do
battery,
that on your laptop or?
no, on my iPhone. I do all my editing on my iPhone. The laptop doesn't.
that would have been
Does
such a
Wow.
great picture of Yaman walking around with a laptop.
Yeah, no, the
The
laptop is
iPad
too.
has Final Cut Pro.
Okay, I'll reach out to you about that one. The laptop is 2012. It can handle anything. It only has like 10 minutes of charge and whatever. But the iPhone is able to do CapCut. Anyway, we can focus on that later. 5 more minutes of this, then live chat while I replay this episode 21 and record it. And then we're gonna discuss whatever we discussed at the time. And then episode 20. Okay, Meta.
All right. If I could ask like 2 or 3 questions to Omar, because you're more
Go
reasonable
ahead.
here. What do you think happens to like their margins and like the outlook of the company if Intel succeeds with Intel 3 or Intel 4, where they're trying to bring the nanometers down from 7, right? So now they're competing directly with TSMC, and Intel starts making their own chips or making chips for others.
Long term, I see margins of between 20 to 30%. So again, there's so many echoes to Tesla, where you had Tesla achieve profitability, and then this shortage happens right after they achieve profitability, where no one can make cars, and their margin balloons to like 33%. Then the market calms down. Their margins are now about half what they were during the shortage. So, that sounds about right.
Like,
30% or so, maybe 20, 30%. I think that's a sustainable long term margin on this type of product.
so TSMC has a 50% margin, on top of which NVIDIA has close to now almost 80% margins. Intel, why isn't Intel like possibly the winner in this space where they would be vertically aligned in North America? So, like, isn't, why aren't we looking at other competitors to NVIDIA like that?
I mean, I would almost give AMD more credit. Intel has really been shitting the bed. They used to be the chip maker. They were synonymous with chips. And it's just been, they lost the desktop and mobile market. Apple was their customer. Apple did their own chips. On the data center side, they're getting killed by AMD and ARM. And even in Mobileye, they had this great asset with Mobileye. They arguably could have done with what Tesla's doing with FSD and done it on a much broader scale and made it for every car, but they kind of shit the bed on that too. So honestly, I question Intel's managerial competence.
I agree
I
with
think
that.
it could be a great
Leadership,
company. It is a great company, but they need the right leadership.
fair argument. Okay. So then the other question is, what do you think is a shelf life of an H100 or equivalent chipset?
Hmm. I mean, I don't know, but I imagine you can just keep offering it at lower and lower prices, the older generation hardware. So, you'd probably keep several generations of hardware in the data center. And if you're a cloud service provider, just offer lower priced instances and pay higher for the newer instances, pay lower if you want the older instances.
Right, but they don't break, right? It's not like discs. They don't break every 3 to 5
Yeah,
years.
they're gonna last a
Yeah.
long time. Yeah.
So then what is the steady state demand relative to where demand is today for Nvidia as a percentage?
It really depends on what the industry's appetite for compute is. Like maybe we, start using methods that just require much more compute, right? Like maybe we're using inference to generate training data to train more models. Like what does AI look like in the future? I don't really know. Of course, the supply of compute as it sort of builds up, there is a steady state. You can kind of see this in the CPU market. We reached a place where it just kind of plateaued. Nobody really needed more performance. It's like we already have all the performance we need. So you would expect that kind of plateauing um, in the GPU market as well. But the question is, does demand for training and inference compute really plateau the same way that CPU demand did? Or is it something that just continues to scale far longer than it did on the CPU side?